S&P closed above 42.10 again. We were also watching this 41.48 in case we sold off. We're going to go through some of the sectors today, what stocks are moving, what may have had a blow off top today, and then some names that are continuing to break out and push and why. We went through a lot of the names this week. We're going to do a lot of follow-up today and tell you where to look tomorrow. Most importantly for us is we're going to have to focus on the Nasdaq. The Nasdaq is where the action's at, and we're going to just jump right into it. As always, subscribe to the channel, click all notifications, because what we go over here is extremely timely. So you can all see right up here and how this played out today, right? And we can all see this doji just sitting right in there. So if we blow this up, and we know that dojis are signs of uncertainty, so what we're going to do is we're going to want to watch this level on the futures tomorrow. So we're going to put up NQ, and then you can equate this out if you use QQQ, but I like using the NQ because it is more fluid and shows what the players are doing. So I don't like that we didn't close above the open. That doesn't make me feel warm and fuzzy. I would have appreciated if we did. I don't usually get everything that I want, nor does everybody else. What I do like here is if we take a look at the previous close. Okay, the previous close was 14,332.50, and you realize that we closed at 14,410, and it's obviously still going on right now at the time of recording this, 13 minutes here, but it looks like we're going to close above the previous close. So I still technically have a gap over the open and the close, which is good. I just don't want the red bar, and let's see how this plays out. But if we drill into this on the hourly and we just take a real hard look at this, you'll see very clearly what transpired today, how we kind of rallied up into it, and then 9 o'clock kind of kicked off, and then we just began our descent. And you can just see the flag right in here. See the bear flag, and then there's your flagpole, 1, 2, 3. Now, they gave us the impression that it was going to hold because you had all these wicks. And wicks, as we know, are price rejection. But that's not what happened, right? What it did was it broke, and then people's dreams and hopes were smashed. You can see your level right there. So tomorrow, if you are trading the NQ or you are trading the Nasdaq, and you want to see what level to look at, it is very clear that the close roughly of this bar and the opening of this hourly bar are your critical area. How can I know that? Because we had wicks that were price rejection below that area that ties into this close and this open. And then at the same time, what else happened? We had a test of that area right there. And how'd that test go? Not very well. We were completely matumboed right there, rejection, and that is what happened. So that is the level that we will be watching tomorrow. Now, if you watch Saturday's video, and I appreciate everybody that did watch it, and I appreciate you sharing it. It's pretty obvious that it was shared. The algorithm will actually tell you that it was shared more. So please share these. It's really important for me to get this information in front of people so they can see what it takes to truly be successful at trading. So we talked about this level out on Saturday, this 502.12. You can see the rejection right here. It's pretty classic rejection, guys. So this is a really strong bar up. This is a gap right into rejection, and it really doesn't get any clearer than that. And you can expect something like that to happen when you have double gaps. They are exhaustions. It can happen. And we talked about this week, and let me show you this because I think this is really pertinent. So Saturday I went through this. These are Bollinger Bands. So 1, 2, so 3, 2, 1. Right? Each one's a standard deviation. So just to be clear, the inside one, there's a 67% chance you're going to stay in that range, closer to 68, 95% chance you're going to stay in the 2-tier range, and the third range there is a 99.7% chance you're going to stay in there. So what I'm going to do is just show you what we went over on Saturday and show you how it worked today. You try to get over that level. There was a 99.7% chance you were not getting over that level. This is why if you're in the Alpha Chasers community, when were in XOL, and we were in down here at 14, when we closed on Friday, it's why I said you may want to trim into this. Number one reason why I said that, besides the fact that we were up 60% in 2 weeks, was right there. I looked at that and said, do I really want that risk? Now, We got a really nice blow off today and we're able to do exceptionally well off the open, and I'm going to get into that. I do get asked to show live trades. I do have a couple that I want to show, and I will be showing maybe this week, maybe tomorrow, or the next day. I have to put it together, but I'll probably be showing the live trade. We did AVGO off the open today and did exceptionally well with it. But the point that I'm getting at with the SOXX is this. This is where you're at. You're out of a third standard deviation. Does this mean that the SOXX is going to plummet? And the answer is no, it does not. What it means is that we're going to revert somewhere in here, and where that reversion takes place, I have no idea. While we're reverting, the third standard deviation bands will actually get wider. As they get wider, guess what happens? The range that you can stay in gets wider. As third gets wider, second and first get wider. So then the variability of the range actually gets wider in a higher percentage. And to understand that, you can actually see that in another indicator. So if you were to go up here and just click, I'll show you through this. So ATR. So like if you want to click through ATR, right, use average true range, what you'll see is you'll start seeing the variability pick up. So on May 8th, the average range, average true, was 23, right? Now you went to 27, 26. So you have a 10% increase in range in the past couple weeks. And you can see back here how the range was even higher. So we would expect ATR to pick up, and therefore we would expect the range to expand, which it will just over time. Now we're spending a lot of time on the SOXX on purpose. We're all aware of this level up here. We're all aware of the complete rejection. That is a textbook rejection. What I usually see are at least 2 or 3 days of follow through of these. So tonight we're going to have the hopers. They're the people that bought stocks today. They bought and they paid up, and they're going to hope like heck that the market gaps up tomorrow so they can sell into it. Now, maybe it does gap up tomorrow. Maybe it doesn't. I don't know. But if you could take out that low tomorrow, and that low looks like 486.27, or hold on one second here, make sure I get that exactly right, 487.27. It's actually a little bit higher, 487.27. If I take that out, I could expect follow through. Now, either later in the day or the next day, you start seeing some level of stabilization. Now, if we take a look at this from an RSI standpoint, and the reason we're spending so much time on this is because this is the leading index, right? This is the leading sector. This volume's through the roof. But we can see the RSI is a little ahead of itself. We're into a key level. We're over a third standard deviation. So the fact that we're pulling back, it should not be shocking. Now, there were some signs of a blow off top. AVGO is one that we traded today and did exceptionally well with off the open. We knew that this one was setting up, and we went through why this was setting up, and it presented a really nice buying opportunity for us today off the open. I'm going to probably show the live trade that we did in the room. If that's of interest, comment below if you want to see that. If there's enough people that comment on it that really want to see it, I'll put it together. But I do usually get a lot of comments. I'm trying to make this wider, perfect for everybody so they can see this. So for us, this was a pretty simple trade. You had your little flim flam off the open, then you can see the high. As soon as you broke the high, that was pretty much it. Candidly, as soon as it flipped the open, I started buying. But once you started getting up here, you knew you were okay. Starts going sideways. I had stock and calls, and we did exceptionally well with the calls. I think we were up like 300% in a very short period of time. And then when we started to crack, that was it. We just got out of the way, and it is what it is. But I didn't know we'd come all the way back down. But obviously, that was just another huge trade. And you can see how somebody could have just been on the complete other side playing that blow off today and just made an absolute killing. That's not really where I want to be, because I get it. I understand how you could make money with it because you're way overdone. And now you're looking at this level right here. And we're just seeing how high we are, and that reversal's nasty. Like, that's a nasty reversal, no matter how you look at it. Chances of that holding, just to be blunt, in my opinion, are slim and none, and slim left town. So you don't usually reverse from those. Usually somebody will hope, and then the next thing you know, you're retesting that 750 level, and you think it's over, but it's not over. It just completed the pattern, right? This is just one nasty evening star, if you know candlestick patterns. And no, it's not perfect. For those who are going to say, well, it's not a true doji, I'm aware. But if you take a look at this, now let's go back on the weekly so you can see, and let's going to go back to this breakout, because this breakout's really important. So we can see from here the breakout, right? Okay, so there's our breakout. Now we all know we have earnings this week. and we're starting to see that push, and we're seeing this move. So it's clearly over, right? Well, I got a lot of comments to start showing this maximum pain, and explaining it. So we're going to do a little bit of this evening. So is this over? Okay, so here's your AVGO open interest. This Saturday, I said you're going to see a huge spike in the 900s today because they're going to try to gamma squeeze it. Guess what they did? They tried to gamma squeeze it. Look at where they're at. Okay, that's your open interest. They didn't close this. This is your open interest as of 5:30 at 4:43 p.m. They update this, and pretty much after the close, but you get it. So they didn't close. They didn't go away. Right, so we kind of have to take a look at that. There's nothing at the 910. We all know why there's nothing at the 910, and we can address that. But if we take a look at where they're at on the open interest, and then we start going into, well, show me what they traded today. I'm trying not to laugh because, I mean, this is the definition of an option market maker just being completely stuck. But if you're looking at the option maturity dates going out on 6/2, what are they playing? They're playing the 900s, okay? They're playing the thousands. They're playing the 1100s. And they're playing these because the option market maker had to create a market for it because he had a problem. And the problem that he had was, we went over on Saturday, is this, the convexity of this. So this is max pain for those that are not familiar with it. There's the symbol. You can do this yourself. But what you want to see is this convexity should be somewhere in the middle. And that means that the market maker doesn't care if it goes down. The market maker doesn't care if it goes up. He could care less if it does this, or he could care less if it does this, unless the convexity is different. The convexity is clearly different here. So what does that mean? Well, he certainly doesn't want to be paying all this out, which is what this means over here. So he doesn't want to be paying all this out. Again, I'm sorry for laughing, but he's just so stuck. So, where does he want to go? Well, he wants to take in the most amount of money he can. 730, 740, 750. Okay, so if you think about where this guy has to be, right around 750, so that he could reset his delta position, right? And then we look at the stock and we start looking at the weekly in that area, 673. Well, that's not going to help us. But what about here? Well, that's interesting, isn't it? Right? So then you start realizing that right there, you're roughly around that 750 level. So if he could get us to 745, 750, which is this exact pattern setting up for that before earnings, well, then he could hedge his risk before earnings, winter earnings, Thursday. That could very well happen, and that could be what we're seeing. We could be seeing the market makers lean on this. We could be seeing them play that game. I think that there's something to that. No matter how you look at it, you cannot look at this if you're long right now and feel warm and fuzzy. Okay, you blew up on the upside. You have to understand it is what it is. Stay out of the way. Now, this is one that I gave on Saturday as well, AI. We absolutely killed it in this today. And a lot of people are still playing it and they're still involved. And I actually even rolled up some options to 45s on the week. I paid up. I didn't care. It just looked to me like they were going to squeeze it. We'll see what's going to happen. Market makers are completely out of position here, guys. Completely out of position. Huge short position. Earnings tomorrow. Good luck. This just looks like it's going to be an absolute face ripper with a gamma squeeze. If you go and take a look at max pain, which we can do, I'm going to do it because I already know the comments will be, why didn't you do that one? So we will. But if you could see what's happening here, this is going to be pretty clear where you're heading. I guarantee that they're looking at the 50s. They have to be, right? To be clear, this is what they had today. So all these strikes didn't really exist till later in the day. Okay, that's when they started putting out the 50s, 45s and 50s. That's when they started putting them out. So you're not going to have a ton of open interest. Now, I can tell you, I have a bunch of 45s, but there's not a ton of them. Now, if you go out there and start looking at volume chart maturity, look at what they're doing to this guy as soon as they started coming out. Right, so they didn't calculate the open interest there. Hold on one second. Let me click off of this, put this here. So now you can see right here the 40s, and now what are they doing? Now they're going out and they're buying the 50s. And they bought a bunch of them, guys. Now, why that's not showing up in the open interest, I'm kind of curious as why that is. Open interest is updated every morning on the days the market is open. Okay, so now that's interesting. Let's remember this from when we do this data. And I'm just going to cycle through this. So if they come out with new strikes, this is the industry standard for OCC who calculates open interest for the next day's market session. Okay, so because those strikes weren't there, they're not going to be showing up on the open interest. All right, so now we got it. So they're not going to show up on the open interest here because they need the morning to set. So in the morning, what you might want to do, and I know that I will be doing it, is just check this website and see what the heck is going on over here. I know there's option activity because I'm in there, and I'm in the 45s too. So keep that in mind. It's definitely something I'm going to want to watch tomorrow morning. But if you see the volume in the chart maturity, you can see what's going on here, and you can see where you're at. So that is very interesting, and please remember that when we're looking at this data. But if you take a look at this, I mean, what are they doing? They're banging the 40s, they're banging the 50s, they're banging the 45s. Like, they are going to jam this. So then you start going looking at the convexity. Well, you have a gap right in here that just looks like, lack of a better term, a suck salad for the option market maker. It's going to have to hedge this somehow, because if you're in no man's land, theoretically, that's not where you want to be. Now, you can see the convexity and how it's moving, right? You're actually shifting to the left. So people are buying puts now. They're buying puts on the market. So the option market maker really is going to want this to settle in around 27, 28. But this is very interesting. You should be paying attention to it, because if you looked at this on Saturday, we weren't this skewed. So people are expecting this they're betting that this is going to go down. That could actually help the market maker on this side of the trade by controlling his delta. So I hope that is helpful. How much of this I will be in on calls or stock before the earnings announcement, I'm not really sure. So I would go on the assumption, people ask me this all the time, and I don't mind telling you, I have absolutely no idea. I might have zero on, I might have a full position on and have that position hedged. I just really don't know, but we'll figure it out and go from there in the morning. We'll go over it in the pre-market call as well. Make sure you come to the pre-market calls. If you can't, just try to watch them a little bit later in the day. There's a ton of information in there. We have AMBA that came out with earnings tonight. You have some huge ones tomorrow that we're going to go over in the pre-market tomorrow. But really what I wanted to do was just give an understanding of what happened today. And this AMBA is obviously down $72, and we should just talk about this. And it was a good beat. They probably didn't say AI enough on the conference call. I didn't think that this was anything awful, but it's probably guidance, and I have to go through it. But I would avoid anything that's missing, and I want to make this point really clear, and I went through this on Saturday, but I really want to make it clear to everybody. If you're missing earnings, okay, even if your stock rallies up, now I went through this one again on Saturday, and I went through it with the community today, but to me, this is going to double digits. This is a nasty, nasty break, like Janet Jackson nasty. Like, this is bad. And you're probably going to double digits here. They have real problems. There's a couple people that I talk to that are buy-side analysts, meaning they work for firms. One in particular that thinks that this is going to go the way of Sears. Like, they think it has massive problems. That wouldn't be for years. From our context, I think that you could break 100 by the end of the year. That's a nice trade, but you're not seeing that backstop anymore. Okay, so here you are with ULTA. And you can see how you broke your level right here, got to that 403. You're trying to flip here, but you're just not able to flip. And I don't know why you would play that when you could be playing the one that came out and beat and raised guidance and actually hit an all-time high today. I mean, that's what you want to be looking at. 1, 2, 3, right? So these 3-bar patterns, I should do a video on this. And comment below if you want to see me do more educational videos. I don't do a lot of what they refer to as evergreen content. I just try to do the actionable stuff so that people can profit the next day or at least make better decisions. But I would be buying ELF. Why would I buy this? Remember, you don't have a backstop anymore. 2021, you had the Fed with $1.7 trillion in the market. So even companies that missed, there'd be some buoyancy in the market because they were buying high yield bonds. Those days are over. Winners win, losers lose now. Have a great night, everybody.